This segment is sponsored by WAEPA. For over 80 years, the worldwide assurance for employees of public agencies, more commonly known as WAEPA, has been providing members with products and services to support their health, welfare, and financial well-being.
And these simple steps on the journey to financial wellness will help everyday Americans secure financial safety and stability. So for more on this, we are joined by WAEPA CEO Shane Canfield. Good to have you back.
Good to see you. It's been a while.
It's been a while, but you have all still been hard at work helping everybody. Why is it relevant in today's market for viewers to really start to think about setting themselves up?
Your previous guest about the overwhelmed parent,
Yes.
it sort of feels a little bit like that in the financial world.
Okay.
So we've got influences of inflation eroding our purchasing power. We've got interest rates. You had a person on about mortgages earlier.
Yeah.
Interest rates on mortgages are twice what they were just pre-COVID. Personal loans, auto loans, and credit cards are through the roof, 20% plus. And the last dynamic that creates a little mental stress for all of us, whether you're a federal employee or not, is the volatility in the equities market and the bond market. Your 401k is going up and down. You don't know what to do with that. It's very stressful. And don't do what I do, which is every day when the bells close, I wait a couple hours to see if the
right.
and then I go look, and it's but it's the turmoil that causes stress.
Yeah. Okay. So what does all of this mean for the average American and also for the federal employees?
The average American, it's a very difficult time because you've got credit cards and you don't want to use credit cards. One of the reasons why the country hasn't slid into recession so far is consumer spending is still continuing at pre-COVID levels. And credit card debt is starting to inch up. And that's very difficult because of the rates that we're seeing. So one of the things we recommend is budget. If you've got existing credit card debt, pay that off.
Get that paid off, yeah.
And put away an emergency fund. We've been talking about emergency funds for years, but usually 1 month's worth of income set aside, and that can be in case your car transmission goes out or the washer and dryer breaks. But what you're not doing when that happens is you're already buying something which already has an inflated price. You don't want to loop credit card debt on top of that.
And we saw too, I mean, with just the pandemic, you really just never know when that emergency is going to happen or what you're going to need it for.
And federal employees, you mentioned earlier about the turmoil in Congress right now with the new speaker coming. And this matters for passing spending bills. And we are now under a continuing resolution that ends in mid-November. You mentioned that before. If you're a federal employee, what if they don't pass that? You could be in a furlough position. It was just in 2019 we had the longest furlough in government history. It was 5 weeks. So unfortunately, we have to unfortunate for federal employees, there's really, at the individual level, there's nothing they can do about that. So what we recommend is an additional 1 month's worth of income set aside, your furlough fund. Eventually you'll get paid, but during that period of time, if you miss in 2019, people missed 3 paychecks. Can you imagine going a whole month? You know, mortgage, rent, all of your bills. So set aside that money, and then when you do eventually get paid, that's not found money. Replenish.
Yes, that emergency fund. Great advice. And we just never know. We see how much longer things are taking now to get resolved. So thank you for all this great advice. We appreciate it. Good to see you in person.
Thank you.
Thank you
Good
so
to
much.
see you.
For more information, visit the website waepa.org.
And you'll see several articles, checklists, and other resources that can help you kickstart your financial wellness journey. Great day. I'll be right back.